My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make a little money. My job's not just to entertain, but to teach you. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. Maybe we are looking at retail all wrong. Maybe this whole discussion about whether the consumer's sick, the consumer's well, the consumer's frugal, the consumer's hard-pressed is just a big pile of manure. The consumer doesn't switch on a dime, people. The consumer doesn't get sick and then get well within the span of a quarter. And as we ponder what the Fed's going to talk about Friday at Jackson Hole, with the averages hanging there, Dow inching up 56 points, S&P advancing 0.42%, Nasdaq gaining 0.57%, we have to start rethinking the great debate about the state of the consumer, as it is at the heart of what the market will need to get the rate cuts we have to go much higher. First, let's set the stage. As everyone knows by now, the Fed needs to start cutting interest rates before the economy deteriorates to the point where they need to scramble the jets to save the day. But they can't move if the economy is doing fine and the aggregate retail sales data is inconclusive. So we're always trying to extrapolate from individual retailers. And taken together, they seem to be saying that the consumer is fickle and perhaps in some cases tapped out. Tonight, I'm contending that she's not fickle. Not at all. People are shopping, and they're shopping where the great retail CEOs are doing fabulous things, like Ron Vakras, Doug McMillon, Ernie Herrmann, Brian Cornell. That's where they're going. Don't know him? Okay, Ron Vakras is the new CEO of Cramer Endless Fave Costco. Doug McMillon has pulled off an amazing, successful multi-year turnaround at Walmart. Ernie Herrmann is extremely low-key CEO of TJX, the $135 billion off-price colossus with 5,001 stores that captivate the American consumer. And Brian Cornell runs the return-to-growth chain that is Target, which saw its stock surge 11% today. The consumer isn't frugal or tight-fisted or sad or happy. People are simply shopping where they want to go and not shopping the other places, which is where these great merchants drive them because they're what matters. The chains that say the consumer's really strapped may just be getting not enough traffic because they're not good enough to make the cut. Why didn't we think of this? Let's take them one by one so you understand why I'm so sure of this. All told, they represent pretty much the entire successful consumer cohort of a country, we remember, that runs on services, not goods. I want to start with Target's Brian Cornell because the company just reported some just excellent numbers. The Street was looking for 1% same-store sales growth, but Cornell delivered twice that. You analyze same-store sales by looking at how much of the gain is traffic, people coming into stores to shop, and how much is changes in price. You don't want that. Target said their gain was entirely from traffic, which is excellent because price increases will distort our thinking, and they're also inflationary. Traffic tells you a great deal about the consumer. Pricing tells you almost nothing. Target's house of brands, Cat and Jack kid clothes, Cloud Island for baby essentials, Good and Gather for food and beverage, Up and Up for household essentials, Threshold, room essentials, Bright Room for the home category. Each of these do about $1 billion in sales, and Cat and Jack alone is $2 billion. Is the consumer rational to spend so much on Target's brands? You bet she is. She's discerning. She knows a bargain when she sees one. She's not a barometer of the economy. She's a customer of Target. And the numbers show that she's shopping more than she has in ages. Some of it's because Target has perfected order online and pick up in the store. Some of it's the loyalty program. But these brands are unique to Target, and that's why it happens. It's Cornell. Unique. And because they are made for Target, they can cut out the middleman and come up with excellent designs and fabrics and save you money. Cornell knows what he's doing. Most merchants may not. Plus, he's rolled back prices on 5,000 items, which was definitely a driver of traffic because the consumer knows that's what's happening. All right, how about this fellow, Ernie Herrmann at TJX? Now, we don't know him much. Honestly, he doesn't do road shows or television interviews. He's incredibly low-key. What he's developed, though, is nothing short of monumental enterprise where bargains abound. Sales, profitability, earnings per share all exceeded plan this morning. Once again, TJX's same-store sales growth came from traffic and not price. which is what you'd expect from the biggest off-price retailer in the country. I may not know Herman, but I know he's great at his job. Look at that stock jumping 6% to an all-time high today. I am so glad we own it for the Charitable Trust. Thank you, Mr. Herman. Walmart's Doug McMillon doesn't like to talk much about the integrals of the quarter. But one thing we know, by rolling back 7,200 prices in the store, people are going to sit up and take notice of this outfit, right? They're going to head to Walmart and they find incredibly low prices, rolled back 21 price, 2020, sometimes 2019. The chain's apparel is so long a drag to walk through. I got to tell you, it's just dazzling. It's dazzling. Plus, before you dismiss that out of hand, I want you, please, just take a look. Don't be a snob. You'll be shocked to see Walmart's great knockoffs of big-ticket apparel. The prices of their house brand foods are through the floor. It's the benefit of scale. But to say the consumer's strapped because she stops at Walmart, that's what I keep hearing. That's insulting. It's insulting to everyone. Walmart's a great American institution that too many on Wall Street thumb their noses at. But Main Street loves it. My daughters and I love going there. Costco, oh, that's like no other. This is the second biggest pure-play retailer in the country, and it views its job as basically a gigantic buying group of fitty holders who will order pretty much everything. The club gets you amazing prices, including some that are below the price the store most likely pays for itself, including those bottles of Cambridge I told you about the other day, and the gold bullion that people are so crazy for. Costco's a one-of-a-kind retailer where you can't find everything, but what you can find is likely going to be cheaper than you can get it anywhere else. This store has done the most to roll back prices for this nation, and it does so via premium house brand, Kirkland Signature. Costco is happy to come after any nationally branded product if it wants to that won't lower prices. And under the Kirkland label, well, I got to tell you, they get prices down because the Kirkland label is better than most of the branded stuff. Costco, Target, and Walmart are at the heart of the move to lower prices in this country. The government cannot do better than these companies are doing. If you look at retailers like this, you can reach some conclusions. They just aren't the ones that fit any narrative. When I asked Target's Cornell what was behind the better-than-expected quarter, he unhesitatingly suggested it really came down to our country's incredibly robust job market. People with jobs are people who spend. The more people with jobs, the more likely it is that Target can beat its targets. The others are in the same boat, too. I think Cornell's right on this jobs point. As he says, and I'm going to quote, consumers have shown remarkable resilience in the face of multiple challenges over the last several years, and they remain resilient today, end quote. They're resilient because they have jobs. You don't hear this enough. But historically, we still have a very, very strong labor market, even if the unemployment rate kind of ticks higher every bit. Therefore, my conclusion is simple. Can we please stop drawing a new conclusion every day about the consumer with each passing earnings report? No two retailers are alike. The ones that roll back prices, Target, Costco, and Walmart, have had terrific sales. The ones that haven't, not so good. TJX, of course, innately does because they stand for low price because they're buying closeout merchandise. When you give the consumer what she wants, which is roll back prices, she's healthy, and she stays healthy as long as she has a job. If you know the employment number, you'll know what the retail sales are going to look like. It's just that individual retailers are all over the place in terms of their performance. Here's the bottom line. We'd like everything that we report at 8:30 and 10 o'clock, we'd like it all to be consequential, right? Regrettably, that's not the case, so let's stop it. But it's great to know that you can buy stocks like Costco, Walmart, and now TJX and Target because they have the consumers back, and they offer you the best values. Maybe, for our purposes, that is all that matters. Craig in Missouri. Craig.
Booyah, Jim. Thanks a lot for taking my call. Longtime fan, was listening to you in the early 2000s on your radio show, and you explained the difference between a limit and a market order to me. I've been buying on limit ever since then.
You've never been picked off. You've never been picked off. That's what I want. People who buy on market get picked off all the time. Thank you.
Thank you so much. It is awesome. I made some money on the Japan carry trade, actually.
Good for you.
Really nice. So thank you so much.
Thank you.
AMD got a price of $138 a share. Am I too low right now, or do I need to adjust?
I think that you can. Now, it's been up a very straight line this week, but I think you can buy more AMD because Lisa Su made that great acquisition, and because her stuff, I've got to tell you, for accelerated computing is terrific. And yes, for AI and generative AI, it is terrific. Buy more AMD as we've been doing for the club. Listen, guys, it's driving me crazy. Not everything you hear is consequential. There's a lot of data points that don't mean anything. Sometimes companies just have their consumers' backs, and that's where they go, and the economy's fine. And that's all that matters. On Mad Money tonight, does the healthcare sector stand out in the slowdown? I'm telling you where I stand when I check up on a name fresh off a new 52-week high. And speaking of healthcare, tonight I'm eyeing an under-the-radar eye care company that you called in on and telling you if my research reveals a buying opportunity. Plus, I'm sitting down with the CEO of Snowflake, fresh off the company's report. I know many people care about that one, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.